Imagine a world where financial transactions occur seamlessly without the need for intermediaries, where individuals have complete control over their assets, and where the barriers of traditional banking dissolve into thin air. This vision, once confined to the realms of science fiction, is now becoming a tangible reality through the rise of cryptocurrencies. As we delve into the potential for cryptocurrencies to replace traditional banking, we uncover a landscape filled with both promise and challenges. The concept of cryptocurrencies emerged in 2009 with the launch of Bitcoin, a revolutionary digital currency that introduced the idea of decentralized finance. Unlike traditional banking systems that rely on central authorities to manage and oversee transactions, cryptocurrencies operate on blockchain technology. This decentralized ledger not only enhances security, but also fosters transparency, as every transaction is recorded and immutable. The implications of this shift are profound, potentially reshaping the entire financial ecosystem. One of the most significant benefits of cryptocurrencies is their ability to democratize access to financial services. In many parts of the world, traditional banking remains out of reach for millions due to stringent requirements, high fees, and geographical limitations. Cryptocurrencies eliminate these barriers, allowing anyone with internet access to participate in the global economy. This inclusivity could empower individuals in developing regions, facilitating microtransactions and enabling them to access funds for entrepreneurship or education. Moreover, cryptocurrencies can streamline cross-border transactions. Traditional banking systems often impose hefty fees and lengthy processing times for international transfers. In contrast, cryptocurrencies can facilitate near instantaneous transactions at a fraction of the cost, making global commerce more efficient and accessible. As businesses increasingly operate on a global scale, the demand for faster and cheaper payment solutions will only grow, positioning cryptocurrencies as a viable alternative. However, the transition to a cryptocurrency-dominated financial landscape is not without its challenges. One of the most pressing concerns is regulatory uncertainty. Governments worldwide are grappling with how to approach cryptocurrencies, with some embracing them while others impose strict regulations or outright bans. This inconsistency creates a fragmented environment, making it difficult for businesses and consumers to navigate the crypto space confidently. Clear regulatory frameworks are essential to foster innovation while ensuring consumer protection and financial stability. Additionally, the volatility of cryptocurrencies poses a significant hurdle. The value of digital currencies can fluctuate dramatically in short periods, making them less reliable as a store of value. For everyday transactions, consumers and businesses need a stable medium of exchange. Stablecoins, which are pegged to traditional assets like the US dollar, have emerged as a solution, but their adoption remains limited. Until cryptocurrencies can demonstrate consistent stability, their potential to replace traditional banking will be hindered. Security is another critical aspect to consider. While blockchain technology is inherently secure, the broader cryptocurrency ecosystem is vulnerable to hacking, fraud, and scams. High-profile breaches have eroded trust in digital currencies, deterring potential users from fully embracing them. Building robust security measures and educating users about safe practices will be crucial in fostering confidence in cryptocurrencies. Despite these challenges, the momentum behind cryptocurrencies is undeniable. Financial institutions are beginning to recognize the potential of blockchain technology and are exploring ways to integrate it into their operations. Major banks are investing in crypto-related services. and some are even experimenting with their own digital currencies. This collaboration between traditional finance and emerging technologies could pave the way for a hybrid system that combines the best of both worlds. As we stand on the precipice of a new financial era, the potential for cryptocurrencies to replace traditional banking is both thrilling and daunting. The benefits of increased accessibility, efficiency, and transparency are compelling, yet the challenges of regulation, volatility, and security must be addressed. The future of finance may lie in a balance between innovative digital currencies and the established banking systems, creating a more inclusive and resilient financial landscape for all. As we navigate this transition, one thing is clear. The conversation around cryptocurrencies is just beginning, and its impact on our financial future could be monumental.